Welcome to Savvy Money Show, me your host Sean. I was planning to do a different video, but then Silicon Valley Bank cropped up, or down, whichever way you want to look at it. May not be all doom and gloom, because Elon Musk has come out and hinted that he may be looking to buy it. And what exactly has happened? Well, someone tweeted to him that he should buy SVB and start a digital bank, and Elon replied, "I'm open to the idea." Now, he's mentioned before how he'd like to allow people to buy things through Twitter. Well, imagine you can pay for your Tesla insurance and buy your Tesla through SVB. If he buys it, he also has a customer base if he's able to hang on to them. But let's get into the video. You're going to look at why they've done this, why this has happened. I've heard a lot of rumours, a lot of people linking it to Silvergate. Although that's had an effect, it isn't the only reason. It started well before them. And we'll be discussing some companies that have money there. Actually, let's start with that. These are just some of the companies that have money in there. You have Circle, like the USDC, has 3.3 billion in there. Roku has 26% of its capital, 487 million in there. So I wonder how that will affect Disney, because Disney holds a lot of shares in Roku, so does ARK Invest. BlockFi has 227 million in there. And just to let you know, the bankruptcy trustee warned them on Monday that because those funds are in a money market mutual fund, they're not FDIC secured, which could be a problem with keeping in compliance of bankruptcy law. Roblox has 150 million in there. Ginkgo Bio, although it's not them, it's a subsidiary of them, has 74 million in there, which is 6% of Ginkgo Bio's cash. iRhythm has 55 million. Rocket Labs 38 million. Sangamo Therapeutics 34 million. Lending Club 21 million. Pioneer 20 million. Now, Archer Aeronautics, they have a loan with them. So anyone who thinks because Archer has a loan with them they don't have to pay it back, don't believe that, because SEC will come calling for that. But let's get into this video. Don't forget to hit the lovely like button and sexy subscribe button, and don't forget the bell notification. You'll be notified when a new video gets uploaded. And the free links in the description below. You can pick up a free share worth up to £200. And check out our Discord. And if you want a more in-depth analysis of any stock or market conditions, then why not look at our upgraded membership program and support us.
Imbibe. The 9th best performer year to date is SVB Financial, don't yawn. This company's a merchant bank with a deposit base that Wall Street had been mistakenly concerned about. SVB is the old Silicon Valley Bank. Recently bought one of our favorite research firms, Buffett-Nathanson, and it's become less dependent upon private equity and venture capitalist offerings. Wait a second, those dried up last year, they could come back. Yes, some of them come back here with the stock directly affects an oversold position. Stock was the 4th worst performer in 2022. I think the fears were not justified, and it's a very compelling situation. Hey, by the way, long-term private equity and venture capital, they're not going away. Being the banker to these immense pools of capital has always been a very good business. Stock's still cheap. Now, you have to remember that a stock that falls 66%, like SVB Financial did last year, it takes it a lot more to recover. After losing 2/3 of your value, you need a 200% gain to get back to even. This is arithmetic. Some people call it geometry. So you could argue SVB's nearly 40% rally this year is barely a drop in the bucket. And that's how I want you to think it. I think it's also a good example of why these bounce back moves might be far from over. These stocks could have more room to run, especially if you think they were driven down to artificially low levels by tax loss selling, artificial dumping.
So Kramer, as in February, has recommended this stock, and it bears so many similarities to Bear Stearns. It ended up becoming $50 stock, and Kramer was claiming you should buy it as everyone was selling it. When is the SEC going to investigate this guy? Because it keeps on. It keeps on happening. We've also found out that on the board there was a chief administration officer who was actually the CFO of Lehman Brothers, and the risk assurance officer was in charge of credit swaps in 2007. You know, it makes you wonder why they end up in this position. But the real reason we're about to get into. This is the outsider bank in Boston that was taken over by SVB, but we're here to find out how it happened. As you know, banks only need to keep 10% of deposits on hand, so if you put in $100, then they can loan it to another bank loan $90 of it to another bank, and that bank can loan $81 to another bank, and so on. It perpetuates. Now, they can actually invest it any way they want. So SVB invested $100 billion in government bonds at 1.7% when interest rates were near zero, thinking the Fed wouldn't raise rates anymore. They held it for 4 years. Every $100 would return $108. But then rates came in, yields went up to a point where the same bond is now worth $77. Now, and for every $100 you put in, you would return $138. Now, they tried, remember, they also sold the risk assurance manager. They fired the risk assurance manager and spent 8 months without a risk assurance manager before bringing in the one they had. But during that time, they had tech going through a culling or a correction, whichever way you want to look at it. So they invest heavily in tech. A majority of their business over the last 70 years has been in tech, and tech has gone through this before. So you'd think they'd be used to it. How the smaller tech companies would need to draw down some of their money just to survive. And what happens when one of these companies tries to come and withdraw 250,000 and they can't? Then rumours start flying around that they can't even cover the minimum insured amount. So they're forced to sell those bonds for a loss. They become unrealised. They went from unrealised losses to realised losses, which caused a $1.5 billion realised loss on their books. And then they tried to do an offering for 2.25 billion, which would have covered the bond's loss. But when rumours came out that they had issues at the bank and the price tanked, the offering failed. You know, and considering that the FDIC insurance is 250,000 and only 2.7% of their customers hold less than 250,000 in the bank, the stronger these rumours got, this caused a run of over 40 billion was withdrawn, which caused even more issues. Now, who will this benefit? It'll benefit megatech with access to capital, the likes of Meta, Apple, Google. You know, these companies who can snap up the smaller companies who can't carry on paying their staff, can't carry on paying the bills. And then they'll get them for pennies on the dollar. So to sum up, another thing, 93% of their deposits were uninsured. And it's a shame to see these people who have put the deposits in, trusting the bank, that they could lose it. But if you know anyone, tell them who has over 250,000 in one of these banks, tell them to contact the FDIC. They will issue a certificate for anything they had over 250,000, and then when the assets are sold, if it gets to that part, then they will get a dividend from that asset. But the problem is this can sometimes take a long time, and some of these companies, they don't have that time. I would like to know what you guys think. Do you guys think there should be a bailout? Do you guys think that the Fed should pivot and perhaps on the off chance see if he can do a tightrope with inflation, just to see how it affects the market? Or do you think he should carry on with the raising rates and let them fend for themselves? Personally, I'm in the camp that the people responsible for this should be arrested for fraud, because they declared credit line as their assets, and for instance, they declared they had 209 billion in assets but had 175 billion in deposits, which were liabilities. 151 billion of them were uninsured. However, 65 billion of the assets that they declared were in the form of a credit line. But as soon as those issues came about, that credit line was frozen. This would be a very stressful time for a lot of people. But you've got to realise the toughest stress tests that banks go through are only for the top banks. The Fed, in its wisdom, said a long time ago, it's loosening stress testing on the smaller banks because they wouldn't pass. JP Morgan mentioned that it had 47 billion of unrealised losses, because, as I said, it only becomes realised when you sell. Now, the question is, do you think Jay Powell will still raise it 50, or do you think he'll keep it to 25? This could give them the excuse to pivot and then actually increase taxes, blaming SVB for the bailout. But I'd like to know what you guys think. Should a bank be too big to fail, or should we have learned the lessons from the last financial crisis? I hate the fact that the executives sold out of a lot of their positions like half a month to a month before this happened, as if they knew what was going to happen. This is a line outside of an SVB, and join the Discord in the link down below. I've been keeping people updated. And I've done a lot of work this weekend from Discord. And if you want to be a Prime member, it's less than $1.25 a week. It's £5 for the month, and you get a daily watch list. And there's a hell of a lot of information in there. We've had an amazing month. So many runners, so many winners. Really, can you afford not to be in there? Now, I want to do this. Shout out to Problem Sniper, who posted it in. I think it's hilarious. And this is how I'm going to end the video.
The proposal is we go to Bill Gates and say, you got 100 billion and you are giving philanthropy, this, that, because charity will get you to heaven and whatnot. That is your tradition. Out of the 100 billion, you give 50 billion to us in trust to be given to you in your next life when we find you. Because it is possible you may be born very poor. Bill Gates may be born very poor. And Warren Buffett may be born in some African village, is a very poor guy. We form a trust management company. Normally, trust is formed to transfer your wealth to your biological offspring and all that. And these banks take a lot of commission and they pass it on to your kids and whatnot. So this will be the world's first inter-life reincarnation trust management. Okay.
I think if we do little more research and establish the authority,
we can do that.
It is possible.
Yeah. The proposal is we go to Bill Gates.
And they're saying this is one way for them to get out of trouble. Anyway, I thought it was hilarious. I'll see you in the next video. That's all for now. Stay safe, stay savvy, stay investing. For those of you like me who have been stockpiling money and stockpiling some gold, you'll probably be able to pick up some good assets fairly cheap soon. I'll see you soon. If you found any of my videos helpful and you want to help me make more, you can support me by buying me a coffee. The link is in the description below.